Let's turn now to some breaking news that we've got on housing. Existing home sales falling in April, down about 1.9% from the prior month. That's more than the 0.8% dip that economists had been expecting. So again, you're seeing existing home sales fall once again. This all comes back to that inventory story, Maddie, that you and I have been talking about time and time again. Simply, these homeowners are not putting their homes on the market because of higher interest rates. Because of that, we have depressed inventory levels, and that, of course, is then weighing on sales simply because the supply is not there. So not necessarily a huge surprise that we do see a drop once again here this latest month.
Absolutely, and it's interesting to point out the inventory piece as well, which I know you were mentioning, but the inventory of unsold existing homes climbing 9% from a month ago. That totals 1.2 million at the end of April, and that is the equivalent of 3.5 months supply, just to put that 9% number into context here. So 3.5 months of supply, that is pretty big. The question then, how does that impact home prices, and particularly not just, homes for buyers, but also for rent, because so much of that shelter component does factor into the consumer price index that the Fed looks at to suss out the rate of inflation in the U.S. It helps them decide what they're going to do with the federal funds rate. Questions about whether or not this is going to start to show up in that CPI data in the coming months here. And home prices seen their 10th consecutive month of the year-over-year price gains in April there, but the pace of price increases could start to taper off soon. That's according to the National Association of Retailers. Joining us now with his perspective, we have Logan Mohtashami, HousingWire's lead analyst. Logan, thank you for being here. A lot of different data points in the existing home sales here, but I'm curious, what stands out to you as the single biggest data point that is driving the perspective when it comes to housing prices and supply?
Supply is growing year over year. Our weekly tracker inventory has been showing that the new listings data has been growing year over year every week. The total inventory data is growing year over year every week. The home price growth seems a little bit strong, but we have to remember last year at this time, the NAR's existing home sales prices were actually showing negative. So it's a very low comp this month, and then the next month will be the lowest comp. And then toward the second half of the year, the growth rate of pricing should cool as inventory is up year over year. New listings data is up, and also price cut percentages are slowly growing up. That'll be a positive in the sense of trying to keep housing as affordable as possible, with total active listings still near all-time lows, but the positive story is going to be that inventory will be up this year versus what we had in 2023.
Logan, why are you so confident that it's going to be up?
Naturally, 2023 was the lowest new listings data ever recorded in history. And even when mortgage rates got toward 8%, the data line didn't move down any. Last year was a historical event. Then we started to see new listings data grow. We were at extremely abnormal levels last year. So our weekly data is going to be a few months ahead of everyone else. And we've consistently seen every single week inventory grow and new listings data grow. And we're almost at the seasonality point where that data line starts to head lower. So for this year, the positive story will be more active listings, more new listings data, and now the price cut percentages will start to pick up a little bit more. We'll see this in the existing home sales reports coming down in a few months.
Well, talk to me about the aggregate data then, Logan. I'm curious if we're missing out on any weakness that could be seen under the hood here. We know, according to Zillow, that home buyers need 80% more than they did 4 years ago to purchase a home. That's according to Zillow, as I mentioned. Are you seeing that big of a hurdle coming up in the data?
Yes, because if you look at 2022, 2023, and 2024, this is the third calendar year of the lowest home sales ever. We have to take it in context to we have over 158 million people working now. So we're not that far from the Great Recession lows in demand. And it shows, right? Even this recent report, we're not seeing any real growth in sales. We haven't seen it for a while. Until mortgage rates head down towards 6% and stay there, it's very hard for this housing market to grow because the majority of all buyers are mortgage buyers, and they're the ones getting impacted the most with home prices accelerating out of control, mortgage rates this high, and also now property taxes and insurance are part into the mix. So you have massive housing inflations, and we've seen it in the home sales basically trending at near all-time lows for some time now.
All right, Logan, always great to talk to you. Thanks so much for joining us here this morning. Lead analyst with HousingWire. We appreciate it.